All of these supposed experts are telling us that everything's going to get better. The problem is it's not. The stock market should have never been surprised by what the inflation numbers were. But the problem is economists and people who are in the know are not giving the information to the people. Today I have to say I was a little bit surprised. Or maybe I shouldn't have been, actually. I woke up and the first article I saw as I was perusing the news, and generally I hit the crypto news first, a crypto exchange freezes because of the strain of CPI volatility. Well, obviously they're not saying that the CPI is volatile, but volatility in the crypto markets caused an exchange to get overloaded. And if you read the rest of the article, that's basically what it's saying. So I said, okay, what's going on here? Okay, because cryptos were doing fairly well the last few days. And so I was, feeling fairly good about my my accounts. But I go over here and realize that, that's current prices. Basically, the crypto markets fell 9.5% for Bitcoin, almost 8% for Ethereum. Okay, something rattled the markets a little bit. So I started doing a little bit of digging. And I, as I continued digging, one of my favorite places to go for the liberal media, at least, is to go to Bing. Well, I see nothing about inflation until I get way to the end here. In fact, this morning, this card here was clear at the right-hand side of the lineup of articles. In other words, not a big deal. Inflation cools in August. Well, that doesn't explain why cryptos are going crazy today. What's going on? Well, what happens when I click on it is all of a sudden U.S. inflation is stubbornly high despite August slowdown. Well, it slowed down in August. Well, if it's getting better, it shouldn't have rattled the markets. Inflation remains stubbornly high. In August inflation breakdown, where are prices hitting the Americans the hardest? Well, let's examine a little bit of what's going on here, because it's obvious that the media wanted to spin this as more of a positive deal. So as I continued looking for articles, falling gas prices help ease for the second straight month, but stays high. And here's what the report tells us. There's a lot of news media that wanted to say, well, gosh, it only went up just a little bit. Well, the problem is, one component went down, the other component went up really, really bad. And basically, the news media doesn't really want to tell you that. Treasury yields rise after CPI surprises to the upside. Well, they expected it to go down to 8.1 and it went to 8.3. And 8.3 was quite a bit more than what they expected percentage-wise. But the Treasury yields are starting to bake in the idea that the Federal Reserve, when they issue their new rates in September, could raise interest rates another full percentage point rather than 0.75. That's a big deal. That means that the Fed is still very worried about inflation. So as we continue down these articles, inflation remains high, sends stocks tumbling. Even as lower gas prices ease consumer pain. They show a picture down here of a food bank that's giving more and more to more and more people and getting less donations because the strain on people's budgets because of food is still so very, very harsh. So let's go down further. August inflation shock. Core prices rise, knocking back the idea of a peaking inflation rate. That's the key here. They expected last month to be the peak and that it was going to continue downward. The challenge is, though, it's really not. Had not the gas prices gone down so dramatically over the last 30 days, the CPI would have been much, much higher. If it had stayed level, I'll show you some numbers here shortly. It says markets rattled and pound slides, so that's the British pound, after U.S. inflation higher than hoped. What's discouraging me is that All of these supposed experts are telling us that everything's going to get better. The problem is it's not. The stock market should have never been surprised by what the inflation numbers were. But the problem is economists and people who are in the know are not giving the information to the people that are holding stocks and not getting it baked into the prices of those stocks. Thus, the people like you and me who don't have a stockbroker on the edge of all the news end up losing every single time this happens. So we'll get to that here in a moment. We've got the Wall Street Journal showing the graph for the stocks, and you see, oh man, this is an incredible drubbing for stocks. And then over here it says U.S. inflation slowed slightly to 8.3%. No big deal. But the stock market thought it was a big deal. What's going on here? And yet another article down here. August CPI rose 0.1%, an unexpected slight increase. Come on, news media, give us the facts. Give us the information that we need to make adequate decisions. The Dow was caught by surprise, went down almost 4%. You can see it basically just kept on going down all day long. You go over here to the NASDAQ, it goes down over 5%. And we thought cryptocurrencies were volatile. Today, boy, the stocks were incredibly volatile. Let's look at the S&P. The S&P goes down over 4%. I read an article a little bit later in the day that basically said stocks may set new lows that we haven't seen in a while. Yeah, that's true. It may, in fact, be the case, because what's happening is the Federal Reserve will continue raising interest rates and continue to squeeze businesses until they have to lay people off. And when they start laying people off, there's going to be less wages being spent in stores, which is definitely going to slow our economy down. Well, we're already in what was normally called a technical recession. But, the definition shifted a little bit because the labor market and the labor rate the unemployment rate still stayed at historically low levels. And because of that, the economists were kind of hedging that bet, saying, well, we're really not in a recession, even though the technical definition of a recession was 2 quarters of negative growth. We still don't have, the unemployment going up. And normally in a recession, you have unemployment going up. So there's about 5 different markers that they look at to say, yes, we really are in a recession. And because unemployment was not going up yet, they basically didn't want to really say we were in a recession. We'll see at the end of September whether we have negative growth again for a 3rd quarter in a row. And if we do, I bet you they'll call it a recession. So what are the numbers? Let's take a quick look at the numbers before we end here. Here is what they call the top line inflation rate. The top line inflation rate went down from 8.5 to 8.3. Now those are the rounded off numbers, and the delta between 8.5 and 8.3 was actually closer to 1 than it was at 2. So, they're saying basically that 9.1 was the high point in June, but July went down to 8.5 and August went down to 8.3. But the problem is that's really not telling the whole story, because what happens here is this is what the core inflation rate. You take off energy and you take off food and you get the core inflation rate, which jumped a whopping 0.4% when it was trending downward. Well, trending downward was a good sign. And the reason the markets were so badly rattled is because all of a sudden it did an about face and started heading right back up again, only 0.2 of a point below what it was as a high in March. So we've got a situation where inflation continues to rise. We look at food, and food is continuing to just go crazy. It's at 11.4% higher than it was a year ago. And everybody is feeling the pinch when they go to the grocery store and they check out at the check stand. A bigger portion of their budget is going towards food every single day. And there's a lot of families that are feeling the pinch. A lot of families that are going to start feeling the need to cut elsewhere in order to have their rest of their budget balance to pay their mortgage and to pay their other fixed expenses. I mean, we're headed into the winter season and we've got to heat our homes. I mean, summer has been really bad with all the air conditioning in those hot parts of the country. But then summer, winter time comes and we have to heat our homes. And that could be very, very challenging, especially for those northern climates. So the food budget gets hurt right here. And I'll bet you when we look at the energy part, and the energy part definitely trimmed downward. Now, this is an index here. It's not the percentages. So the index actually went down, but here it tells up here where I've highlighted that it's 23%, 23.8% higher than last year. So the inflation rate at this point, even though it's trending downward for energy, it's still very, very high compared to last year. And it's contributing, of course, to that core rate going up. It didn't ease enough to completely offset the increases in food. So batten down the hatches. We're probably in for a challenging time going into winter. I would expect the housing market to follow suit in the fact that people aren't going to be looking to buy houses during this time. They're having a hard time putting money away to save for down payments, and interest rates are going up anyway, so they're kind of trying to chase payments upward, which means that housing prices have to go downward in order to make them affordable again. And that takes time for that to happen. So take care of yourselves, and please get prepared, get some food set aside, get some money set aside. Try not to spend a whole bunch of money going into this inflationary period, and make sure that you keep your houses and keep a roof over your head. And we'll see you again later. Thanks.